हेलो फ्रेंड्स, वेलकम टू माय चैनल. दिस इज सीए राखी अग्रवाल. आज का हमारा टॉपिक है इंडियन अकाउंटिंग स्टैंडर्ड 110, दैट इज कंसोलिडेशन ऑफ अकाउंट्स पार्ट 11. So let's start our topic. How deferred tax affects goodwill. We have discussed a topic on deferred tax. You will check it out from my previous video. It is deferred tax. Today I are discussing about this concept comes from the interaction of Ind AS 103, that is how we will calculate goodwill in business combination as per Ind AS 103, and as per Ind AS 12, that is for deferred tax, how we will find out deferred tax following Ind AS 12. So basic concept: deferred tax directly impact goodwill at the time of acquisition. When we acquire any company, at that time we will acquire all the assets and liabilities of that company. We will pay, and what was the net worth of that asset? Friends, becomes the goodwill. While calculating goodwill, we use the fair value of identifiable net assets. At the time of acquisition, we will determine the net assets of all the assets and liabilities of the subsidiary company, and what we are paying in order to purchase that assets, that liabilities. The differential becomes the goodwill, and on that goodwill, whether deferred tax adjustments is required or not, which includes deferred tax adjustments. Why deferred tax directly impact goodwill at the time of acquisition? Because while calculating goodwill, we use the fair value of net identifiable assets, and this includes deferred tax adjustments also. Goodwill formula, that is consideration whatever we are paying in order to acquire that percentage of subsidiaries plus NCI, that is non-controlling interest, becomes the asset of that subsidiary, minus net assets whatever we determine at fair value, and the differential becomes the goodwill. If deferred tax liability, how deferred tax liability increases? If net asset decrease. If net asset at fair value decreases, then deferred tax liability will increase. If net asset increase, then DTA will arise. That is, deferred tax asset will increase. Increase in DTL means goodwill increase. Impact will be goodwill is increasing, and increase in DTA means goodwill decreases. Why deferred tax asset arises at acquisition? At acquisition, assets and liabilities are recorded at fair value, but tax base remain old value. This creates temporary difference leading to DTL or DTE. So this consideration becomes 500 lakhs. Fair value of net asset before tax adjustments is 400 lakhs. Carrying value of net asset is 350 lakhs. So temporary difference becomes 50 lakhs. It is 30%. DTL becomes 50 lakhs for 30%. It becomes 3 lakhs. Adjusted net asset 400 lakhs is the fair value of net assets minus the deferred tax we had calculated. 15 lakhs is the liability for the organization, so it is reduced from the net assets. So minus 15 lakhs, because calculation is done at time of acquisition, so we reduce the value of deferred tax liability, so it becomes 385 lakhs. Determine the goodwill. Purchase consideration becomes we are paying for acquiring that asset, that is 500 lakhs. Value of net asset after adjusted figure, that is 385 lakhs. Goodwill becomes 115 lakhs. If deferred tax liability is there, goodwill increase. But if deferred tax asset is there, goodwill will decrease. Because goodwill is increasing by 115 lakhs. Without deferred tax, if we are doing the comparison, then if no DTL is there, then goodwill becomes 100 lakhs. Purchase consideration 500 minus the fair value of net asset becomes 400, then goodwill becomes 100 lakhs. But after considering the deferred tax liability, goodwill increase from 100 lakhs to 115 lakhs. Final conclusion, that is deferred tax affects goodwill because it changes the value of net assets at acquisition. Deferred tax liability increases goodwill, deferred tax assets decrease goodwill. Why deferred tax liability increase goodwill? Because it reduces the value of adjusted net assets. Why DTA decrease goodwill? Because it increase the value of net assets. How goodwill and deferred tax affects NCI? This comes from the interactions of Ind AS 103, that is business combination, for determining the goodwill. Ind AS 110, that is NCI, and Ind AS 12, that is deferred. Key idea is very important. Deferred tax affects net assets. Net assets affect goodwill, and if net asset is affecting the goodwill, NCI is calculated based on the net asset, that is on fair value. These deferred tax liability affecting the net asset, and net assets affecting the goodwill. 385 is net asset is affected. In that case, NCI is also affected. So deferred tax indirectly affects NCI through net assets and goodwill. Step 1, deferred tax arises, that is temporary difference, DTL. Here DTL is arising, that is 15 lakhs. Net asset reduced, that is 400 minus 15, it becomes 385 lakhs. Goodwill increases, that is 500 minus 385, so it becomes 115 lakhs. NCI is calculated. Now impact depends on the method of NCI valuation. This concept is explained with the help of example. Suppose the fair value of net asset on the date of acquisition, that is on 1st April 2026, is becomes 3,300 lakh. Carrying value of net asset on the date of acquisition, that is on 1st April 2026, it becomes 3,000 lakh. Holding company acquires 60% in subsidiary. 60% is acquired by holding company, that is in subsidiary, so it becomes 2,500 lakh. That is the purchase consideration is paid by the holding company in order to acquire 60% stake. Tax rate becomes 30%. NCI based on market value of subsidiary limited, that is value of non-controlling interest is 1,500 lakh. It is already given. Determine goodwill on the date of acquisition using both Ind AS 103 approach, that is business combination approach, and Ind AS 110 approach, that is consolidation approach. We are calculating goodwill by using both the approaches, that business combination approach and by using consolidated. Further information, equity share capital of subsidiary on the date of acquisition becomes 500 lakh, and profit and loss account of the subsidiary is also given on the date of acquisition is 2,500 lakh. Assuming remaining useful life is 10 years of the net assets of the subsidiary. Ind AS 103 approach, by using business combination, that is 6-step model. Acquirer becomes the holding company. Date of acquisition is 1st April 2026. Purchase consideration becomes 2,500 for 60% stake. Fair value of net asset becomes 3,300. Carrying value of net asset is 3,000. So difference becomes 300. Tax liability is 300 ka 30%, it becomes 90 lakh. Here why tax liability? Because fair value of net asset is more than the carrying value. So DTL will arise. So in this case, deferred tax liability is arising. 300 into 30%, it becomes 90 lakh. Net asset taken over, the value of net assets of the subsidiary company is given in the question, that is 3,300, and we will adjust the deferred tax liability because we had calculated by using Ind AS 12 approach, that is the deferred tax liability. So reducing the fair value of net asset by deferred tax liability by 90, so it becomes 3,210 lakh. Now we will determine the value of goodwill by using two approach, that is fair value approach is also, they will calculate the goodwill by using proportionate share of net assets. So fair value approach is NCI at fair value is given. It is given in the question, that is 1,500 lakh. Determine the goodwill by using fair value approach. So goodwill calculation becomes purchase consideration 60%. The holding company pay while acquiring 60% stake, that is 2,500. Add NCI value, that is the fair value is given in the question, so it becomes 1,500. Total becomes 4,000 lakh. Less net asset at fair value, that we had calculated adjusted net asset, that is 3,210 after considering the deferred tax liability. These deferred tax indirectly affects the goodwill because it affects the assets, net assets, so it affects the goodwill. Goodwill is increased by 790. So goodwill at the time of acquisition becomes 790 lakh. But if we follow the proportionate share of net asset, that is NCI at proportionate share of net asset, so it becomes 40% stake is held by NCI, so the net asset becomes 3,210. 3,210 ka 40%, it becomes 1,284. So how goodwill is to be calculated? 60% is the purchase consideration 2,500. NCI becomes 1,284 by using proportionate share. Net asset at fair value 3,210 lakh. So goodwill becomes 574 is the goodwill on the date of acquisition. Because net asset is affected. Net asset is reduced because of deferred tax liability. These reduce the NCI value. If NCI value is reduced, these also reduce the goodwill. Goodwill on the date of acquisition. So difference as per fair value and proportionate share of net asset, difference of goodwill becomes 216. This 216 is generated by using 6-step model as per business combination approach. But if we follow consolidation approach, then how we will calculate? So that is cost of control. Investment in subsidiary becomes 2,500 lakh. In order to acquire 60% stake, that is equity share capital is given in the question, that is 500 500 lakh. 500 का 60% it becomes 300. Pre-profits is given at the time of acquisition. The profit of subsidiary becomes 2500. We will determine this pre-profits by adjusting the deferred tax liability. So how we will determine this pre-profits? Analyzing the pre-profits on the date of acquisition, that is these 2500 is totally related to pre-profit. Post-profit is nil. That is balance on the date of acquisition of subsidiary, that is 2005. Fair value of asset increase. So we add the increase in the fair value of net asset by 300. And deferred tax impact is also given in the net asset. So reduce the deferred tax liability by 90. Profit becomes 2710 lakh. This is the pre-profits distributed between the holding and subsidiary. Holding companies का 60% it becomes 1626 and subsidiaries का profit becomes 1084. Pre-profit 3% is 1626 and NCI का value becomes pre-profits becomes 1084. So goodwill becomes of control में we had invested 2500 and we eliminate the equity and pre-profits of the subsidiaries, so goodwill is arises 574. So NCI at fair value becomes equity share capital, that is given 500 का 40% 200 lakhs. Pre-profits is 1084. We are analyzing the value of reserve. Closing fair value of net asset is given in the question, that is 1500 lakhs. Differential becomes the goodwill through NCI. Through NCI the goodwill becomes 216. Control से goodwill generate हुआ है 574 and NCI से 216 lakhs. So total becomes 790 lakhs. 790 is using fair value approach, that is business combination method. The goodwill becomes 790 by using fair value approach. By following consolidated method, now NCI at proportionate share, that is equity share capital becomes 500 का 40%, it becomes 200 lakhs. Pre-profits becomes, that is pre-profits as we had calculated here 1084. By adjusting the fair value of net asset and deferred tax liability, it becomes 1084. So closing value of net asset becomes 1284. Total goodwill at proportionate share becomes 574, because in this case proportionate share of net asset goodwill is not arising. So cost of control का जो goodwill है, that only becomes the goodwill by using the NCI at proportionate share of net asset. So goodwill becomes 574. By using business combination, the goodwill at the time of acquisition becomes 570. Analyzing the reserve after acquisition, that is profit after acquisition becomes that is after 1 year it becomes 2800. Out of that pre-profits is 2500 and post-profit becomes 300. What effect is given in the post-profit? Depreciation का effect, because the fair value of net asset is increased by 300. How much we will give the effects of depreciation? That is the useful life is 10. We reduce the value of depreciation by 30. 300 minus 30 it becomes 270. So we will reverse the DTL by depreciation का 30% it becomes 9. How much depreciation we will decreasing, उसका DTL को रिवर्स करना पड़ेगा, क्योंकि हम लोग ने फेयर वैल्यू ऑफ एसेट को ऐड किया, उसका डिफर टैक्स लाइबिलिटी को रिड्यूस किया. तो यहाँ पे डिप्रिशिएशन जब रिड्यूस करेंगे तो डिफर टैक्स लाइबिलिटी को रिवर्स करेंगे. दैट इज 30 lakhs is the value of depreciation, उसका 30% that is 9 lakhs is to be reversed. So it becomes 300 minus 30 plus 9 lakhs, so it becomes 279 lakhs. So holding company का उसमें से 60% है, so it becomes 167.40 lakhs and subsidiary का उसमें से 40%, that is 111.60 lakhs. So this is the concept related to impact of deferred tax on goodwill. Thanking you for watching my video. If you like, please share, subscribe.